Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we've had a stock market pullback on 4 December 2018. We're going to be covering the four main indexes, the emerging markets. Take a look at stock futures currently looking negative going into Thursday. We're going to take a look at financials that sold off very heavy here on Tuesday, back down to some of the lows back in 2017. We're going to be taking a look at oil, the dollar, silver, gold, bonds. And while we are in, the yield curve has inverted, it doesn't always mean that we're going towards a recession. Now, there's a whole bunch of other factors out there as far as the trade war that's going on. We thought we had some sort of a peace treaty there on Saturday that was signed, but then President Trump came out tweeting again, his Twitter fingers, and talking about tariffs, and that caused some uncertainty in the markets. And as you know, the markets do not like uncertainty. So let's go ahead and get into it all. If you are brand new to the channel, I do make stock market, personal finance, real estate investment videos every single week. So consider subscribing, and let's go ahead and get into it. So on Tuesday, the S&P 500, the Dow Jones, and the NASDAQ sold off roughly 3%. The S&P 500 is currently in third place right now, up year-to-date 0.99%. The Dow Jones here down 3.10%. It is currently in second place, up 1.25%. And the NASDAQ sold off 3.8%. It is currently in the lead, up 3.69%. Now, a lot of investors within the chat are discussing the Russell 2000 as being the leading indicator of how our economy is heading, because the S&P 500, the NASDAQ, and the Dow Jones have a lot of these large market cap stocks. They're not just national, but they're international. It's hard to really use them as a factor of how our economy is going as far as the small and mid cap stocks. Whereas the Russell 2000, it contains 86 stocks here of small to mid cap stocks, 86 stocks, and these are mainly all national. So it kind of gives you an indicator of how our economy here within the nation could be moving. Now, it did sell off 4.4% there on Tuesday, going down into the negative year-to-date 3.57%. Now, how have we been in the past weeks? Again, I like to do my stock market recaps every single week here. So last week, all the indexes were up 5% nearly. S&P 4.85, Dow Jones 5.16, the NASDAQ 5.64, the Russell 2000 up near 3%. So, while the previous week here, we're just in that bounce. We may go up 5% in a single week. We may go down 3% in a single day. There's a lot of volatility out there, volatility that is playing a huge role. We had the Fed coming out on the 16th, which is, I believe it's after the 16th, maybe like a week or two away. They're going to be coming out raising rates again. So if you're getting any refinancing, I'm going through a refinancing now, trying to lock in all my rates. That way, when they raise them, I have a locked in rate already. So I'm going through all that, but we are going to be doing another rate hike here about mid-December, and then we'll see how it kind of cools off in 2018. Now, currently the emerging markets still sell off 2.12%, year-to-date down nearly 13% there, 12.95%. This one, it had hit their lows right around the $34 point before coming up high. So this is actually not too bad if you bought in lower back around that $34 point. Right now, some of the most active stocks here, there's not a whole lot of stuff here going on because, as you know, markets were closed here on Wednesday. So here, very little movement here. First Data Corp up 2.15%. Interesting, never really heard of that company. So a couple other ones there. Now, financial sector here on Tuesday got slammed, down 4.35%. If we take a look here over just the last year here, we've actually fallen below, near our 52-week highs. So let's see here. Our 52-week low is at 25.02. So I don't know if we actually broke. Let's take a look here for the day. I don't know if we actually broke it. There was a article, something came out that I know it was discussed. So I'm not sure if we actually hit our 52-week low on Tuesday, but I know it was very close, and that was something that was out there on the media being discussed, that all the financials got slammed regardless of where they were at. Goldman Sachs, for example, it was already down, and the Dow Jones, one of the furthest here down nearly 30% year to date. It got slammed an additional 3.82%. So Goldman Sachs, this one, it was trading at highs of 200, and let's look at here, $275 $186.31. It is now trading at $184.31. You know, Apple sold off from $232 to 170 now. So Goldman Sachs has taken a much harder blow than what Apple has had. Now, home builders also down 4.66%. There was some news coming out as far as real estate goes, slowdown in Texas. That may have been playing a part there. The oil sector, Russia and Saudi Arabia coming to some sort of agreement, or maybe it was OPEC. But here, Monday, December 3rd, oil was up over 4%. Okay, so we have oil up 4% on Monday. Okay, so we had an increase there of 5% on oil coming off those lows. Yes. I don't know if you guys were out there shopping and buying oil. I know I filled up my gas tank, and I believe it was $2 a barrel, or $2 a gallon. Super inexpensive when I was going to Costco to get my gas filled up. No, oil prices let's see here, taking a look here. So oil prices fell down 0.75% on Tuesday. OPEC let cuts and mandated reduction in Canada output. OPEC meeting on the 6th of December. Crude rose to 62.39 in the morning. So oil fell on Wednesday as a swell in supply glut and signs of economic slowdown weighed on crude prices a day ahead of the OPEC meeting. Okay, so on Thursday, we may see we're going to have some sort of a sell-off here on Thursday. Oil is going to start off a little bit low. There's been a lot of chit-chat that the dollar is also falling here. I don't see it. I know the dollar has been within this 97 range, so there's not a whole lot here we can see. The dollar has not really hit its highs here back in November, 97.54. It's now around 97.06, so really not too bad there. I think the dollar is sort of settled right now. It's not really climbing too high. We can see year to date, the dollar has got a lot stronger from the beginning of the year. There was when the stock market fell back in February, March timeframe, the dollar fell to one of its lowest points here that it had been. Let's take a look here. Yeah, back in January, this was one of the lowest points, and that was kind of really weird. I don't know the whole reason behind the dollar falling to this point as the stock market fell. Normally if the stock market's falling and stocks are getting cheaper, dollar getting weaker is not really something that I've seen in the past. Normally as the stock market climbs very fast, the dollar normally decreases here, sort of, January 2017 here, the stock market, we had a 22% rise within the S&P 500 during 2017. Here, the dollar sold off from highs of 100 all the way down to lows of 92. So, kind of interesting to just kind of take a look at. Silver, 5-day change up 2.48%. On Tuesday, up 0.96%. The gold here up 0.61%. 5-day change up 1.82%. Silver and gold both down. Silver down nearly 15%. Gold down a little over 5% there. And the bonds here, there's been kind of a mixture here as far as investors moving towards bonds. They're discussing the mixture of having silver, gold, bonds being roughly 70% of their portfolio and stocks being around 30% of their portfolio. So there's a lot of investors out there doing a whole bunch of different things with their portfolios. 10-year yield, we talked about the yield and being inverted for the first time since 2007, I believe, was the last time that the yield curve had inverted. Now the yield curve, inverting it is an indicator of a possible recession, but that's what's got a lot of investors spooked, and there was a bit of a sell-off there on Tuesday, but it doesn't always mean that there's going to be a recession. Whenever there is a yield curve and being inverted, it doesn't always lead to a recession, but every time that we've had a recession, there has always been a yield curve inverted prior to the recession. So right now, we can still come out of this as long as, if we get rid of the trade war, rate hikes stop happening, or they kind of settle as far as what they're predicting. I don't know what would fix the rate hike, yield curve being inverted. I really don't know what would fix that. So I'm not any sort of specialist in that specific, how I would figure that out. But that is basically it. Not too much else I wanted to discuss today. If you guys have anything else you guys would like to leave in the comment section below as far as news and media, let me know in the comment section. Otherwise, if you are brand new to the channel, remember to like, comment, and subscribe to stay tuned in. So that is it. Thank you all for tuning in. Quick disclaimer, I am not a financial advisor, tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor myself trying to help others make their investments work for them. Thank you all for tuning in. I will see you next time. Have a great day. Bye.